This ETF is really interesting. So first off, read this disclaimer carefully. We are talking about the CLIX ProShares long, online and short brick and mortar stores ETF. So let's jump into the charts. So this is the long-term picture, weekly data points going all the way back to November 2017. So you can see that there's been big rallies and big sell-offs. Let's actually do some measurement. So this sell-off was minus 21%, the biggest rally. This one here was 37-ish%. The interesting thing is that even during the recent plunge in the market, this one has actually seen a rally, and that is due to this strategy, because it mixes short and long positions. So it is not market neutral as such, but it is market neutral-ish. And the gain here speaks for itself. So let's zoom in a bit to the most recent developments. Yeah, we could of course use daily data points to get some more detail. So like that. So you can see here that the intraday volatility can be substantial. Like this day here, you can see the candlestick crashes and then closes higher. Here, there are these very big moves within a day. If you look at the moving averages, we are above the 200-day, and we are actually above all the key moving averages. Daily moving averages, you can see here that the volume has increased rather substantially, and in these times you would expect interest to pick up for these kinds of ETFs. The average true range has increased substantially, which speaks to the pickup in volatility. So it is the highest level of volatility. Let's look. The highest volatility in the entire history of this ETF. If you look at the RSI, we are basically in the neutral zone here at 55. We do get some statistical correlation here on the daily data points. So you can see that the highest correlation between this ETF and the S&P 500, that was 97% positive correlation in August 2019. The lowest correlation we have seen, it was actually minus 36% here, late 2019. Today, the correlation is only 15% positive. So that is really, it's basically no correlation whatsoever with the S&P, which can be very beneficial in these rough times. So let's learn a bit more about this ETF. So here you got CLIX. It's from ProShares. Expense ratio is 0.65%, which isn't too bad given that there's not many of these ETFs. Assets under management, $38 million US. Average daily dollar volume, 675,000 US dollars. So this is basically the strategy. So CLIX is founded on the premise that the brick-and-mortar retail industry will wither under pressure from online shopping. This is definitively being accelerated with Corona. The fund provides 100% long exposure to online retailers and 50% short exposure to traditional in-store retailers. Note that this gives CLIX only 50% long beta exposure to the broader retail industry. So, yeah, this is really interesting. Really interesting. Number of holdings is actually surprisingly small, only 25, but the weighted average market cap is, these are big companies, $335 billion US. So, The vast majority of stocks are from USA, 79%. Then you actually have Hong Kong and China. Predominantly department store and internet services. So here you can see the total top 10 weighting. You get Amazon, which is obviously in the e-commerce category. Alibaba, also e-commerce. Got eBay, Etsy, Grubhub. Do they differentiate here between the short and the long? Not sure. Maybe we have to go to the company's website. So let's do that. Like so. I think we go here. So yeah, let's look at the daily holdings, whether they make it clear or not. So here I can see all the different companies at least. This is e-commerce. Yeah, this is how they do it. Okay, this is how they. Okay. So overall, this is a really interesting ETF. The gains, they speak for themselves. Yeah, definitively one to have on your radar. Here you can see some performance. So whatever you do, of course, you want to let the trend be your friend, and I definitively think that the trend is very much in favor of e-commerce and yeah, brick and mortar retail. The future is pretty darn challenging.